Okay, guys, I'm just finishing the night up with the last Ask Scruff question. And it's for, I think it's Sticks Bonds, or forgive me for pronouncing, I'm not really sure how we pronounce this. Sticks Bonds. Anyway, regarding 10K Madness account, another question about movement on the DAX and placing a stop. As you know, it can shift. So I was wondering what your thoughts are about a big stop. No. And for them sort of markets, half an ATR, is that the daily, the hourly? Would you be going smaller, decent stop? No. Oh, okay. Let me just kind of work that one out. Whatever market you're going into, whether it's pound, JPY, the DAX, S&P 500, doesn't matter. Your stop placement is kind of critical to two barriers: a solid level and a swing point. Okay, so they're the first things. Now, the distance that they can be is, I work roughly on 1/2 to 3/4 of an ATR, and it's a daily ATR, but that's because I average into it. So because I average into it, it naturally reduces that exposure. Now, on something like the DAX or the US 30, NASDAQ, something like that, something that is traditionally incredibly quick, the stop will still be in exactly the same place. But to stop the risk, I would actually reduce the position size rather than sort of tighten up the stop or widen the stop. Certainly don't want to widen the stop any further than the ATRs, simply because if it goes beyond that point, the chances are it's not coming back, or it's certainly not coming back anytime soon. So therefore, I've got to ride out a hell of a lot of noise. So there's opportunity cost to take into account. And then what if I'm wrong? Well, then I've just really put a big hole in the ship. It's not something I want to do. So what I'll do is the stops will always be where they have to be, because that's the thing. A stop has to be where a stop has to be. So I'm not into sort of just fixed stops. I'm not too keen on that. I'm certainly not into tight stops. Oh, I'm trying to time the market to 10 pips. The DAX would tear you a new one in a heartbeat. So I put the stop where it has to be based on a level and a swing point. I make certain its cost is within sort of the ATR range. So if that level and swing point is beyond there, then I've got to ask myself a question: is it worth it? And the answer is no, it's not. So I just wouldn't wait. I would just let the price either react, or I'll look at something else at that point. Now, what you got to remember is the stop has one job. One. It's got nothing to do with the trade. Zero. Its only job is to protect the account. That's it. I'm wrong, and that's where I'm getting out, and how much will that cost? And if I'm unhappy with how much that costs against the account that I've got, then the trade is not good enough in the first place. So I hope that helps. Catch you soon.